No doubt you've heard many ads from some mortgage brokers hyping their no-points loans to either purchase or refinance a home. These ads seem to imply that paying points to get a real estate loan is to be avoided like the plague, and that they are just great lenders for not charging you those nasty points. Well, listen, folks, there ain't no such thing as a free lunch, and these guys aren't processing your loan for free. Points, which are a percentage of the loan amount, are somewhat determined by the financial marketplace. But mortgage brokers get paid by either collecting points from you, or they get rebate points from their loan funding source. And sometimes they get paid by a combination of both. But either way, they get paid. Well, of course, within reason, there's nothing wrong with this. You don't go to work every day for free, and neither should an honest and reputable mortgage broker that you've chosen to do the work of processing your loan package. In general, the lower the points, the higher the interest rate is. And conversely, the higher the points, the lower the interest rate is. Most lenders can offer you an option for a loan with no points at a certain interest rate. But you might consider using points as a tool to, in a sense, buy down that interest rate, which of course would result in a lower monthly payment. As we said, the more points you pay, the lower your interest rate should be. For example, a $300,000 loan with 0 points at 6.25% would result in a monthly principal and interest payment of about $1,847. But by paying just a half a point, or $1,500 up front, you can get a lower interest rate of only 6%. That's a full 1/4% lower than the 0 points loan, resulting in a lower principal and interest payment of about $1,798. That's a savings of $48.50 every month. By dividing the $1,500 in points you paid up front by the monthly savings of $48.50, we can calculate the number of months to your break-even point. In this case, it's about 31 months. In other words, it would take you only 31 months of lower payments to reimburse yourself for the $1,500 in points you paid up front. If you keep this loan for much more than 31 months, obviously you will benefit by paying the half a point up front. So the longer you have this lower interest rate loan, the greater your savings will be. And here's a thought. In a buyer's market like we're experiencing now, you might ask a seller to pay all or a portion of those points to buy down that interest rate for you. So when comparing loans and lenders, compare apples and apples. When a lender advertises that their loans have no points, remember, that's only half the story. If they're advertising a no points loan, you should ask what the interest rate is for that no points loan. And if they're advertising a really low fixed interest rate, you should ask what their points are for that low interest rate. And remember, if it sounds too good to be true, it just may not be true. When you find a reputable lender with a fairly priced loan, you can work with that professional to customize the rate and points to suit your budget and plans. Reputable mortgage brokers will take the time to educate you as to the options and alternatives available for each loan program. And they'll provide you a more personalized service that can save you money in the long run. If you've got any further questions or would like help with analyzing your situation, feel free to contact me. My phone number and email address are located on this webpage. And don't forget, we want to hear from you. So send me an email with questions and topics that you'd like to hear about on future segments of our show. And thanks for watching.